Welcome, aspiring wealth builders. Today, we embark on a transformative journey, exploring the art and science of turning financial aspirations into tangible reality. Whether you're starting with a modest budget or a blank slate, this guide is your compass to navigate the exhilarating terrain of building wealth from nothing. Buckle up as we unravel practical strategies, unveil the secrets of strategic saving, dive into the dynamic world of wise investments, and discover the alchemy of turning challenges into opportunities. Get ready to unlock the vault of financial wisdom and chart a course towards a future where your money works for you. Join me on this adventure, a roadmap to financial prosperity where every decision shapes your destiny. Welcome to a world where the pursuit of wealth is not just a goal. It's a transformative journey filled with knowledge, strategy, and the thrill of turning dreams into financial triumphs. Without further ado, let's dive in. 1. Establishing a budget. Creating a budget is the fundamental cornerstone of building wealth from nothing. Begin by meticulously assessing your financial landscape. Understand your income sources and break down your expenses. This process unveils the financial terrain you're navigating, allowing you to identify areas where adjustments can be made. Prioritize your needs and wants, differentiating between essential expenditures and discretionary spending. Once you've categorized your expenses, set realistic and achievable saving goals. Allocate a portion of your income specifically for saving. This disciplined approach transforms saving from an abstract concept into a tangible and measurable habit. Consider establishing an emergency fund as a crucial component of your budget, providing a financial safety net for unexpected challenges. Regularly, revisit and adjust your budget as circumstances change. Perhaps you find new ways to cut costs or experience an increase in income. Flexibility in budgeting ensures adaptability to evolving financial situations. Consistency is key. Adhering to your budget over time contributes to the accumulation of savings, laying the foundation for future investment opportunities. In essence, a well-crafted budget serves as a roadmap, guiding you through the terrain of your financial journey. It empowers you to make informed decisions, seize opportunities, and ultimately paves the way for the accumulation of wealth, even if you're starting with limited resources. 2. Strategic saving. Strategic saving is the linchpin of wealth building, transforming financial aspirations into concrete progress. Once your budget is in place, the next pivotal step is allocating savings with purpose and foresight. Start by determining a realistic percentage of your income to save consistently. This deliberate approach ensures that saving becomes an ingrained habit rather than an occasional endeavor. Consider establishing short-term and long-term saving goals. Short-term goals may include building an emergency fund or saving for a specific purchase, while long-term goals could involve saving for major life events, like buying a home or funding your retirement. Each goal serves as a stepping stone toward financial security and independence. An emergency fund is a cornerstone of strategic saving. This reserve provides a financial buffer against unforeseen expenses, mitigating the impact of unexpected challenges such as medical emergencies or sudden repairs. Aim to accumulate 3 to 6 months' worth of living expenses in your emergency fund, creating a robust financial safety net. Automation can be a powerful ally in strategic saving. Set up automatic transfers to your savings account to ensure consistency and discipline. Treating savings as a non-negotiable expense, similar to bills, reinforces its importance in your financial planning. Ultimately, strategic saving empowers you to take control of your financial destiny. It provides the capital needed to seize opportunities, weather financial storms, and most importantly, lays the groundwork for future investment, the engine that propels your journey from financial stability to wealth accumulation. 3. Learn and educate yourself. Investing time in self-education about personal finance is a pivotal step on the path to building wealth from nothing. Knowledge serves as a potent tool in navigating the complex landscape of financial decisions. Begin by cultivating a fundamental understanding of key financial concepts, such as budgeting, saving, and investing. Diversify your learning sources. Explore reputable books, attend workshops, and leverage online resources to gain insights from experienced financial experts. Understanding the basics of how money works, the principles of investing, and the dynamics of the market equips you with the confidence to make informed decisions. Stay current with financial news and trends. The financial landscape is dynamic, and awareness of market changes, economic indicators, and global events can influence your financial strategies. Engage with trustworthy financial publications, podcasts, or online forums to stay informed and adapt your approach accordingly. Consider seeking guidance from financial professionals. A consultation with a certified financial planner or advisor can provide personalized insights tailored to your specific circumstances. They can help you set realistic goals, create a customized financial plan, and offer advice on investment strategies aligned with your objectives. Continuous learning is the cornerstone of financial empowerment. As you deepen your understanding of personal finance, you gain the confidence to make strategic decisions, optimize your financial resources, and chart a course towards wealth creation, irrespective of your initial financial standing. In the realm of building wealth, knowledge is not just power, it is the compass that directs you toward financial success. 4. Explore additional income streams. Exploring additional income streams is a key strategy for building wealth from nothing, providing a dynamic avenue to supplement your primary income. This proactive approach involves identifying opportunities beyond traditional employment to increase your overall earning potential. Consider starting a side hustle or freelancing in areas where you possess skills or expertise. This can range from freelance writing, graphic design, consulting, to offering services such as tutoring or social media management. The gig economy offers a diverse array of opportunities to leverage your unique talents. Invest in developing new skills that are in demand. Learning a new language, acquiring digital marketing skills, or gaining proficiency in a specific software can open doors to additional income streams. Online platforms and marketplaces provide accessible avenues to showcase and monetize these skills. Explore passive income opportunities through investments. Real estate, dividend-paying stocks, or creating digital products are examples of assets that can generate income with less active involvement. While these often require upfront effort and capital, they have the potential for long-term financial returns. Networking is crucial in discovering new income streams. Attend industry events, connect with professionals in your field, and explore collaboration opportunities. Networking not only opens doors to potential income sources, but also facilitates knowledge exchange and skill enhancement. In essence, diversifying your income sources reduces financial vulnerability and enhances your ability to save and invest. The pursuit of additional income streams is a proactive step toward financial resilience and wealth creation, allowing you to harness your skills and creativity to generate income beyond the constraints of a traditional job. 5. Invest wisely. Investing wisely is a pivotal step in the journey to build wealth from nothing, offering the potential for long-term financial growth. While it requires careful consideration and a degree of risk, strategic investing can multiply your initial resources and pave the way to financial prosperity. Start by understanding your risk tolerance and financial goals. Consider factors such as time horizon, liquidity needs, and overall investment objectives. This foundational understanding will guide your investment decisions and help you tailor your portfolio to align with your unique circumstances. Diversification is a key principle in wise investing. Spread your investments across different asset classes such as stocks, bonds, and real estate to mitigate risk. A diversified portfolio is better equipped to weather market fluctuations and economic uncertainties. Educate yourself about various investment options, whether it's individual stocks, mutual funds, exchange-traded funds, ETFs, or real estate. Each has its own set of risks and potential returns. A well-informed investor is better positioned to make sound investment decisions. Consider a long-term perspective. Investing is not a get-rich-quick endeavor. Patiently hold on to your investments through market fluctuations, allowing compounding to work in your favor over time. Regularly review and rebalance your portfolio to ensure it aligns with your evolving financial goals. Seek professional advice if needed. Consulting with a financial advisor can provide valuable insights tailored to your specific situation. They can assist in crafting an investment strategy aligned with your objectives and help navigate the complexities of the financial markets. In summary, wise investing involves a thoughtful and informed approach, taking into account your financial objectives, risk tolerance, and the power of compounding. By strategically deploying your resources into diverse and well-researched investments, you set the stage for potential wealth accumulation over the long term. 6. Avoid debt and manage credit. Avoiding debt and managing credit responsibly are critical components in the process of building wealth from nothing. These practices lay a solid foundation for financial stability and provide the necessary discipline to navigate the complexities of personal finance. Firstly, strive to live within your means. Avoid accumulating unnecessary debt by distinguishing between essential expenses and discretionary spending. Prioritize needs over wants and resist the temptation to rely on credit for non-essential purchases. Creating and adhering to a budget is instrumental in this regard, enabling you to allocate resources responsibly. Should you already have existing debt, develop a structured plan to pay it off. Prioritize high-interest debts while making consistent payments on others. The goal is to gradually reduce and eliminate outstanding balances, freeing up financial resources that can be redirected towards saving and investing. Managing credit responsibly involves maintaining a healthy credit score, timely payment of bills and debts, keeping credit card balances low, and avoiding unnecessary credit applications contribute to a positive credit history. A higher credit score not only improves your financial standing, but also provides access to better interest rates when needed. Recognize that credit can be a tool for building wealth if used judiciously. For example, responsibly managing a mortgage or using credit for strategic investments can contribute to long-term financial growth. However, it's essential to strike a balance and avoid over-reliance on credit, ensuring that it serves as a tool for financial progress rather than a burden. In essence, steering clear of unnecessary debt and managing credit wisely fosters a financial environment conducive to wealth building. By adopting disciplined financial practices, you empower yourself to make strategic decisions, allocate resources effectively, and lay the groundwork for sustainable financial success. 7. Continuous improvement. Continuous improvement is a fundamental principle in the ongoing journey of building wealth from nothing. This involves a commitment to learning, adapting, and refining your financial strategies over time. Embracing a mindset of continuous improvement positions you to navigate changing circumstances, seize opportunities, and optimize your path towards financial prosperity. Regularly review your financial goals and adjust them as needed. Life circumstances, economic conditions, and personal priorities evolve, requiring flexibility in your approach. By reassessing your objectives, you ensure they remain relevant and realistic, setting the stage for effective wealth-building strategies. Stay informed about changes in the financial landscape. Markets fluctuate, tax laws evolve, and new opportunities arise. Keeping abreast of these developments empowers you to make informed decisions, whether it involves adjusting your investment portfolio, exploring new income streams, or optimizing your tax strategy. Reflect on your financial habits and seek areas for improvement. Are there more efficient ways to save money? Can you enhance your investment strategy? Regular self-assessment allows you to identify and address potential pitfalls, ensuring that your financial practices align with your wealth-building goals. Embrace a commitment to lifelong learning in the realm of personal finance. Read books, attend workshops, and engage with financial experts to deepen your understanding of wealth-building principles. Continuous education not only enhances your financial acumen, but also instills the confidence to make informed decisions in a dynamic financial landscape. In summary, the journey to build wealth is not static. It's a dynamic process that requires adaptability and a commitment to growth. By consistently refining your goals, staying informed, and embracing a mindset of continuous improvement, you position yourself for sustained financial success and the realization of your long-term wealth-building objectives. Remember, building wealth from nothing requires dedication, discipline, and a long-term perspective. By following these steps and staying committed to your financial goals, you can set yourself on a path towards financial success. Thank you for joining us today, and best of luck on your wealth-building journey.